Now, I'd like to invite up on the stage Jorge. Where's Jorge? Oh, you're on this side. Okay, Jorge. Jorge is the CEO and founder of DD360 in Mexico, and he's going to talk about from FinTech to PropTech, building a residential marketplace. This I'm looking forward to. Thanks, Jorge.
Well, thank you so much for sticking by and continuing to be here on a Friday. I'll try to make it as interesting as possible. And I think that just by any means, I would be considered probably an outsider to the industry, Because I come from traditional financial background. I used to work at Goldman Sachs. The presentation, I think, is going to be made public, so I signed the release. Just if you want to take pictures, you can take pictures, but otherwise, everything is going to be public, everything that we're going to be saying. But I come from a traditional finance background. I used to work at Goldman Sachs. My last job, I was co-head of investment banking for Mexico, and I was running real estate for Latin America. There is where I met my co-founder, he was a partner that was running the whole Latin America, and we realized that there was an opportunity to do real estate financing in Mexico. We saw that back then, the residential developers, they didn't have an opportunity to have funding other from the banks, and it was very difficult to get equity. So we thought that there was an opportunity to do subordinated lending. I'm not going to get into the details and bore you with all the financial jargon, but subordinated lending is usually you would have equity and debt. We would put something in the middle. We would substitute equity with some debt-type features. And we became really fast, the adoption. So right now, we have close to 50 or 60% market share within this product in Mexico. But what we realized is that providing that type of financing to the developers, it gave them then the opportunity to also have the construction lending and then the individual mortgages. So we began integrating forward little by little. And the first thing that we realized is that there was an opportunity to have a lot with data. And that's how we got here and into your industry. In Mexico back then, it's 3 years ago, there was basically no data. We thought that it was very difficult for the developers that we were financing to have information of how the project was going to be performing, what was going to be the sales absorption, and whether the project was going to be successful or not. So we began doing, with our own algorithm, the information to see how much each home was going to be worth in Mexico. I'm going to get more into details of that. But then we also realized that there was a lack of information for the agents and that we could be doing a lot more for agents. So recently, this year, we just acquired the second largest agent CRM in Mexico, and we have been having really good traction. In addition to that, from a PropTech standpoint, right now we have the price engine where we cover most of Mexico. We cover 90% of Mexico. We also have the CRM that I was mentioning. And in addition to that, we also have individual mortgages where we can originate mortgages for consumers, and we can either sell them or we can keep them within our books. Now, who we want to become, and what we want to become is the leading financial and data platform residential in Mexico. And let me be very specific, because this is the first thing where I see a lot of differences when I'm talking with finance and here with PropTech and portals. What is to be the leading? And for us to be the leading platform, I remember when I was a child, when you were playing a board game, either Monopoly or Risk or something like that, and how frustrating it was whenever the one that was leading was collecting through the go, or he was getting a lot of troops every single time that was his turn. I think it's discouraging whenever you see that someone else is getting so much, and it becomes very difficult to catch up with him. We want to be that guy. We want to be the guy that is getting more troops. And what does that mean? Making profits. We're crazy about profits. Everything that we're thinking about is how do we make profits. We don't mind not growing as long as it's not going to be profitable. So everything that we're going to be talking about and this ecosystem that we're building needs to go back to profits. We have been profitable for 70 straight months. Every single month, we need to make more money than the month before. And that is how we measure everything and all the initiatives that we're having. I'm going to tell you a little bit more about how we make money and some ideas that potentially you can try to replicate in your own market. What do we think? And once again, this is an outside perspective. I know that you guys probably all know more about me, about these portals, but I'm going to tell you the outside perspective. So portals, right now, they're a big classified business. So if you see the evolution of portals, they become newspapers classified, classifieds become online, online becomes an ad. But then you're working for the seller. And whenever you're working for the seller or the agent, you're really restricted of what you can do and what you cannot do. First of all, for you, it would be a little bit challenging to say if a home is expensive or not. If the guy that is paying for the classified sees that I'm putting that the home that he's trying to sell is expensive or should be worth less, then he might think that I'm boycotting him. So I have my hands tied whenever I'm getting the money from the seller. And we think that this needs to change because everything that you guys have been building up to now has been tailored to the seller because that is the way that you're getting the money. And we think that the solution that we need to have is the solution is going to be more custom and tailored for the consumers. I think that no one has been thinking about the consumers because what you're showing to them are 17 pages of classifieds, and I don't think that anyone wants to see 17 pages of classifieds. I want to see the most opportunities, but the most opportunities that are going to be good for me, not for the guy that is paying the money to put an ad in front of me. So this is the solution that we came into. Like I was mentioning, we were providing loans. The first thing that we wanted to know was how much each home was worth. So that's why we did this Monopolio version 1.0. The 1.0 only had prices, so very similar to what Zillow was doing in the state with this estimate. We had prices for every single home in Mexico, but we realized that adoption was really slow because you would get into the website to see how much a company was worth once because you didn't want to get, this was not a recurring business. And that's why we evolved and we launched Monopolio 2.0 earlier this year. What is the main difference? That we became an aggregator. So right now, we get into every single portal. We get into every single agent's website. We take all the data, with connect with them, and we can show you everything within Monopolio. The way that we have it is basically we have two layers. We have one layer of how much each home should be worth, and then the second layer that we have is what is the supply or what are the opportunities that you can buy. If you're a buyer, you can get into Monopolio and you can tell it, just show me the good opportunities. If you only want to see the good opportunities, we're going to be comparing what is the NAV, what is the asking price, and we're only going to be showing you the ones that are good. If you want to invest to rent, then we're going to be just maximizing for the cap rate that you can have. I think that we have many, many features that is very difficult to try to implement whenever you're being paid by the agents or by the seller. Very soon, we're going to be releasing, before the year ends, Monopolio 3.0. And we think that there needs to be a big evolution within the industry where solutions continue to be evolving and tailored to the buyer and to the people that is looking for the opportunities. So we're being inspired right now for everything that is being done by Perplexity, by Anthropic, and by this type of GPTs, where you get a lot of information by interacting with a web page. So it's not going to be as rigid as you would see right now. So I think that you should be iterating and having more things that are going to be tailored to the buyer. What do I mean? Maps, tables, comparisons, projections. There's a lot of information that I can start asking the platform and that I can start interacting with. We get and we obtain close to 75% of all the residential real estate that is online. In Mexico, we have a big problem that a lot of the information is offline. But of the information that is online, we have close to 75%. So when you compare the amount of listings that we have versus what the leader in Mexico has, and by the way, the leader has close to a 60% market share. And they would have like 40% less listings than what we have, of the quality listings that we have. Ones that you take duplicates, ones that you take the frauds, and ones that you take everything. So we're really, really getting all the information and all the supply within the market. How do we do it? We connect with the portals, or how do we do it? If the portal doesn't want us to connect directly with them, we would bypass them and go directly to the agent's website, and we would send the leads. Why we can do this, and what is the most important things and the differences that we have with traditional portals? The first one is that we don't charge anything to list or to promote. In Monopolio, it's really a meritocracy. If you get into the website and you look for the best opportunity to buy within certain neighborhood, we're going to be showing you the best opportunity. We analyze the data, we analyze the valuations, we analyze the pictures, we classify them, and we would be showing you the best information that you would have. The second thing is that we don't charge agents for leads. We never want to charge them. We don't charge buyers, we don't charge agents, we don't charge people that are listing into it. And you're going to be asking, how do we make money? I'm going to get into that one shortly. The other thing is we don't have ads. We don't want to be promoting anything. So what you're seeing really is the best one that you can get. But this is the catch, and this is the way that we do it. So the way that we do it is, like I was mentioning, we have a FinTech, or we have a financial company. So and we're aligned with the buyers. So if you were looking for a home that is, and your budget was 200K, but we're able to find a home that is 150K for you, and it's a bargain and a good opportunity, we want to be the ones that is financing that home. Why? Because in our eyes, you would have already like 50K of equity. So if we had to take the home over, we already have some cushion in it. The second thing, in that sense, we're aligned, and we want to be providing the best information for the buyers in order to find a bargain or to find a good opportunity. If, for any reason, you want to buy a home, but instead of the 200, you find something that is 200K, 250K, and in our eyes is, let me call it expensive, but you still want a mortgage, then we can turn around and we can sell it into a bank. So I think that banks are going to be happy financing that one, and we can also make a profit, even if we don't think that is something that we want to hold into our books. But then the other thing that we have is that we can continue having this type of continuous capabilities of programmable agents. I'm going to be talking to you a little bit more of where we think the industry is going to be going, the portal industry, but we think that there's going to be a substantial shift within the next 3 to 5 years that is going to change the way portals work right now. This is the core that we do, and this is the core that we have. We are only as good as the data that we're able to get and the data that we're able to provide to our customers. The first thing that we do with the price engine, we gather a lot of information of what is happening into the market. We have multiple sources. We have private and public sources for this information. And then we classify that information and we show it within the price engine. So we're going to be showing you what are the best opportunities, what are the price trends, what we think is going to be the appreciation for each home, and how much each home should be worth. The second thing that we do it with DD360 SaaS is that we provide the same information and analytics, but to the developers. Whenever you're building, if you're being financed by us, we would tell you what we think is going to be happening into the market in a more dynamic way. So for example, the way that we can tell you this, if you're building in X neighborhood, a building that has many 2 bedrooms and studios, but we think that there's going to be a really large supply of 2 bedrooms, we would tell you to lower your prices of the 2 bedrooms and raise the prices for the 1 bedrooms. We have an active advisory team that is working with the developers, and we're telling them what they need to be doing. At some point in time, we want to reach the point where developers rely almost 100% on us and what should be the pricing policy that they should be having. And this pricing policy is something that should be dynamic. We want to learn from the market, and as much as information that we can learn from the market, we want to transmit it to the developers so that way they can maximize the revenues and the profit that they're going to be getting. We wanted our developers to do better than the market, and that way they can pay us faster, they can pay us more, and they can reinvest and they can have a new development. And last but not least, we did this acquisition of Wigot, which is a company that for us is strategic. Wigot is the second largest agent CRM in Mexico. We have close to 25% market share of the agents in Mexico. And we think that we can get to 50, 60% probably by next year. The agent CRM is something that hasn't been with a lot of evolution in Mexico. And for us, it's strategic. Why? Because if we have a decentralized network of agents, whenever we run into any problem with one of the developments, we can connect with the agents, and then we can have bi-directional type of opportunities. We can tell them to help us monetize and to sell. And just by offloading from our own balance sheet, it can be a win-win situation. This is the slide that summarizes everything that we do. This is the secret sauce. So I'm going to be open with everything that we do. But whenever there's anyone that gets into, I know that it's a little bit messy, I'm going to go through it. Whenever there's anyone that gets into a monopolio to look for real estate opportunities, we would analyze that profile, and we would try to see whether this person needs an individual mortgage. If they need an individual mortgage and we want to be the one providing it to them, then we would link it with Compa. Compa is our individual mortgage brand. If we don't like the risk profile, then we would be selling it to a bank. The second thing that we do is that we would be gathering a lot of information. With that information, we can have the analytics and the active advice that we would be having to DD360 SaaS. And that way, we have this active management of the portfolio. Then, with the same information, we would be providing to the agents through Wigot, and we would be telling the agents what should be the pricing, what is the reaction that we're getting from the market, and whether they should raise or lower or change the ad that they are having within the different portals. And the more information that we have, the better the listing aggregator and also the appraisal that we have. Right now, we can provide free appraisals, but we're also providing appraisals that are for a cost or certified appraisals. In Mexico, every single transaction that you do needs to have an appraisal. We think that we can disrupt the industry as well, just with all the data that we have, and that we can be providing that type of service. When we talk about TAM, for us, talking about TAM, given that we're a financial company, we talk about what is the market size and what is the market size on a loan perspective. Right now, we have close to 42, 50% market share in pre-development or these mezzanine type of loans. In construction loans, we have 3% market share. We have 7% when you take a look at the committed loans that we have, and we have less than 1% in mortgages. We think that there's a huge opportunity in mortgages in Mexico. Mexico has one of the most underrepresented industries from a mortgage standpoint. We think that we can grow more than 10 times. When we think about TAM, once again, and getting back to our DNA, we think more about the profits that we can make. And we think that just by having the 10% market share, which we think that is achievable within the next 3 to 5 years, we can get to a company size that will be having something close to $200 to $250 million of net income. That is the goal. That is what we're working on every single day. To put in perspective, that would be more than what Rightmove is making right now. This would be only focusing on Mexico. That would be something a little bit smaller than what CoStar is making. But that would be net income that we would be making just by capitalizing on this opportunity. I had this slide just talking about why we think that this FinTech and PropTech proposition is the winning strategy. We're coming from FinTech to PropTech. I know that many of you guys are coming from PropTech and trying to become into the FinTech. Taking a look at Ed's slide of how many of you are trying to originate mortgages. I think that originating mortgages is good, but it's better whenever you keep them in their books and you can become it way more profitable. But instead of getting into these points of why we think that we're going to be a winning proposition, I wanted to share 5 insights of the main differences that I see between the finance and the PropTech or portal type of industries. The first one, and that would be to complement all of you, is that I think that the portal and the PropTech industries, you guys are really innovative. I think that the amount of people that are talking about AI, the AI and the technology adoption that you guys are doing is impressive. You wouldn't get this type of things from a financial or FinTech industry conference. So they would be making baby steps. You guys are really, really trying to see into the future and what is going to be changing. The second thing that I think that is really, really different is that in this industry, usually only the leader makes money. In the finance industry, everyone makes money. Money has become even a commodity. If you take a look at the banking industry in Mexico, the top 10 players make money. And money has become a commodity in the sense that when you see the banks, they are valued at 5, 6, 7, or even 10 times price earnings. Here, nobody talks about earnings. Yesterday, we were talking about EBITDA, and it's so difficult to make money from an EBITDA perspective, and that's why you get these 30, 40, 50 times valuation EV/EBITDA, which is crazy. You wouldn't find anything that is close to that in the finance industry. The other thing is that given this structure, where in finance, most of the players make money, and in PropTech, very few make money, and it's very difficult to make money, is that in finance, all the references that we get have to be with how profitable your operation is. We would get efficiency ratios, that is how efficient is your operation regarding the cost structure, so we're crazy about cost. We try not to spend on anything. Whenever I get into here, you guys are really good, but you spend a lot in marketing. Whenever we talk in the finance operations, everything is about ROIC, or return over invested capital. Nobody's talking about investing capital in here. So whenever we talk about who's the market leader in the finance industry, it would be the most profitable ones, and the ones that have the higher ROE. In here, the leader would be the one that has more traffic. But the traffic is good, as long as you can translate it into profits. If you cannot translate the traffic into profits, or if I need to be reinvesting all the time just to maintain my position, then it's worthless. It's very difficult to make it worth unless that can be translated into real cash flow. The fourth point that I see the difference between your industry and the finance industry is in PropTech, there's this stigma about having assets. So nobody wants to have assets. Whenever you take a look at the assets from the leaders, you would have either cash or goodwill. That would be the only assets that we have. Whenever you take a look at the finance industry, we would be having productive assets. And I think that that gives us some type of protection in the downturns and also to continue capitalizing on the growth. And the last point that I think that I wanted to share with you of the difference between the two industries is that I see that everyone in here is talking about a future that continues to be centralized. And by centralized, I mean that you guys have been used, that the industry leader is the one that is taking most of the profits, and that is going to continue in the future. In finance, usually we think that the future is going to be decentralized. We think that there's going to be a lot of new participants. We think that there's going to be, everything is going to be in very, very small and in a bottom-up approach. I think the same is going to be happening from the portal perspective, and that is what we're working on DD360. We want to empower the agents to become the ones that are having all the power in order to be promoting, and we think that the future is going to be very different to what you see right now. And just to close the presentation, the way that we think the future is going to be, we're going to have a smart agent in our phone that is going to be looking for every single opportunity. If I want to buy a home, this agent is going to be getting into all the portals and all the agents' pages. It's going to be giving me active advice of what is going to be happening. And I think that the portals can get bypassed with this type of agents. It's going to be very difficult of these agents only to rely into one portal. And lastly, the one that is going to be having a lot of power as well is going to be the one that is providing the last mile. And the last mile is going to be provided by the agents. And that's why we think that the super app, or the one that is in my phone, as well as the agents, are going to be the ones that are going to be winning. But to maintain a position only being a portal without participating in any of these two might be a little bit challenging, but that is only my advice as an outsider to the industry. But thank you so much. Thank you so much for the invitation, Simon. I run a little bit out of time.
I love contrarian views. Excellent. Okay, by the way, fascinating. Super fascinating. Everyone like that one? I thought that was really good. What do you mean when you say, why do you not charge for promoting listings? Do you have a free premium visibility products?
No, we're an aggregator. In fact, we don't have a relationship with any type of agent, direct relationship. So people ask us, how can I be listed in Monopolio? If you have a website, Monopolio is going to go and find you. Once again, we're working on this future where we think that you have within your phone some type of super app, some type of super agent that goes and looks for you. So you don't need to be in Monopolio. Monopolio would go and find wherever you are listed.
Okay, are there any other examples of real estate marketplaces that are solely lead generation for a finance business?
I think there are none, or I thought there were none, but Simon corrected me, and you told me that there was a company in Russia that was trying to do something similar, Sberbank?
Was it Domifund, who's owned by Sberbank? DomClick, thank you. It's owned by Sberbank, and a lot of it's about lead generation into the mortgage businesses.
There's this Russian company. We've never seen it, but we're trying to innovate within the finance industry. We're not getting inspired by anyone.
But this is sort of like a Matura or Trovit meets a bank, and you come together and you're just creating that nexus between the demand side, the supply of the listings, and then the financing and bringing it all together.
Yeah, that is correct. Right, but the only thing that is different, I think, Simon, is that, for example, all of you, the only way that you would be monetizing would be by charging to the bank or by charging to whomever you're going to be having. In Mexico, usually the commission would range anywhere between 1% to 2%. If you keep it within our books, we think that we can make 7% to 8%. It's more difficult. You need capital. You need to have the capital markets. You need to do securitization. You need to do the servicing. So there's a lot of things that need to happen, but usually you could 7x that opportunity.
Okay. For a portal to grow in mortgage, would you advise it to focus on buyers or on providing tools for the agents?
Very good question. We're focusing on both. I think the agents is the easy one, because for the agents, it's a headache just to get the mortgage. And I think that the buyers can do it directly as well. So I think that both of them. I think that the easy answer would be the agents, but I think that there's more value if you create something and you create a platform where the buyer can be the one that is getting the mortgage.
How tailored is your model for emerging markets versus for the established markets where there are pre-existing banking relationships? Far more people are getting mortgages more easily and so on. How far is yours more?
Fantastic question. I think that my model would work everywhere in the world. You would need to customize it. So for example, if I wanted to do what we're doing in the United States, I wouldn't have just the balance sheet tied to it. So potentially you need to change some things. You would need to have some type of SPV that is being funded by, I don't know, by a strategic one, but then you can securitize. But it would be more efficient from a balance sheet perspective.
Okay. How can you focus, given you have very different products?
That's a really good question, and that's something that we're always balancing in. We have a company that is upside down, so we have many, many product managers. We try to empower them. We give them a lot of autonomy, and we put KPIs that is going to be on profitability. So I think that we did that change earlier this year, because before we had one company that was subsidizing the rest of the things because it was very profitable. So when we were subsidizing the different products, we realized that people didn't have focus and that people were thinking long-term. Whenever we changed the model and we began measuring every single product by profitability and by how much revenue they can have, we saw that there was a huge shift and improvement within the performance of the market. So I think that just empower people, give them autonomy to make decisions, and also measure them on profitability have been the three winning strategies.
Jorge, thank you very much for sharing that. Fantastic
Thanks
what you're doing. Very, very interesting.